traders, I am looking at the oh, webcam, where have they gone? Alright guys, can anyone see me? Because I cannot see myself and I'm a little concerned by that. Usually you can see alright, obviously something's going wrong with the camera. Could have been my wife. She was cleaning up earlier today. She might have knocked out the cable. So yeah, no camera today, but it's okay. You don't need to see me every day. It's there's yeah, I mean basically we're talking about trading anyway. We're just going to be going over charts mostly, but sometimes it's good to just say hello. Everyone see I'm alive and well. Yeah, so what's these charts and what's going on here? These are pro real-time charts. You can get them at prorealtime.com, or you can get them if you trade with IG. You do a minimum number of trades, and then you can get them for free. I like them; they're quite nice. I like the way they auto draw lines, and I don't have to add too much to them myself. And if you have multiple screens, it works across multiple screens very seamlessly, which is something that obviously MT4 does not do. Yeah, and if you want multi-screen setup and you want to take advantage of that, it's best to have a professional charting package like this to really get that. So yeah, IG will get you access to that, and it's the way I've been doing it for a while. But yeah, Pro Real Time, I think you can get a trial for free at Pro Real Time, so why not have a go? But you won't be able to trade through anything, right? Because you need a broker to trade through the charts if you're going to trade off charts, if that's your thing. So in regards to the markets, though, we did see a fair few of the things we talked about happen overnight. So one of the things that we're talking about is the risk-off move, right, and how to take advantage of that, and the potential for oil to continue selling. And once we got oil continue to sell, the US stocks went with it, and you've seen fresh little grindy lows, nothing really crazy though, and that did take some of the pressure, the cellular steam out of the recovery in the dollar yen, and so we made new lows in that. That's really quite telling in terms of the dollar yen price action. You're probably not going to get another big rally very easily there, given that one was stopped so abruptly. And so the US dollar's on the back foot, commodity currencies on the back foot, and risk is off. So the dollar CAD trade we have going is working okay. Really, it's still struggling to make the gains that you usually would though, so that's noticeable. And the other trade which is making some gains here is gold. Gold is broken back above that 1250 level in the Asian session today, as risk has been turned off pretty much across the board, and the selling has sort of continued at the start of the European session, so there's no reason for us to think this is going to end anytime soon. Yeah, I trade WTI, I don't really trade Brent, so just to keep it simple, we'll talk about WTI. WTI had the brief little rally after those oil inventory numbers last night, and then the market sharply sold into that. That's a pretty telling sign, yeah. That's a pretty telling sign that the bear's in control. Now, although it doesn't mean we're going straight down to 40. 40 is the target now, and probably if I was a buyer, I'd be waiting for 40, right? No reason to get involved just early unless there's a whipsaw moment or some sort of comment that the market can seize upon to squeeze the shorts here, because the shorts must be building up by now. You know, there's no reason to get involved buying until we get to that 40, and then even then you need to see some nice price action off 40 to get involved in that rally. Last time we were on the way down, we did get all the OPEC talk. So OPEC talk, you know, potentially expanding OPEC cuts. Something like this might happen if we get close to 40 or underneath it, and that'll be a way to get a relief rally. Yeah, other than that, I don't think the US shale is going to come offline anytime soon. So the whole downside story makes sense in the short term. Price action lines up with that, and they're in control. So you can't fight it, right? You can't just buy because it's cheap. You can't just buy because it's overextended, right? That's just not enough reason. You need a catalyst here. If you buy, you might be underwater for a couple of dollars before getting back out at break even, or it might just collapse and not give you a chance to get out, right? So it's just not there. You know, or you know, buy here will get a rally to 44. Yeah, maybe 4 times out of 10, or 3 times out of 10. Yeah, and other times you lose how much? Much more. So yeah, unless you're really bullish on oil and you think it's going above 50, I don't think there's any reason to get involved early. And so just hold off until there's a reason to buy and there's some price action that supports buying. And you can take that same element of understanding to other pairs as well, like dollar yen when it's crashing. You know, if that was 110 and it broke 110 like that, there's no reason to buy until you see a reason or get some price action to help. And you know, same with the euro. If euro breaks, you know, 113 and it's on the way to 115, don't just sell at 115 because it's, you know, a big level. You wait for the price action and a reason to sell. And pound, right? You don't just buy 125 because 125 is the level we've been talking about. It's you need something else. But yeah, no, I have no reason to jump involved just yet. So dollar CAD should go higher, and the fact it's so sluggish is concerning me. In fact, it concerns me so much that I'm just going to close that dollar CAD trade. I don't like the feel of it. I will leave the gold trade running, and that's you know, a different sort of trade. But I'm not going to be trading the you know, the dollar CAD just now. And you know, I don't want to go to sleep tonight and see a huge reversal in oil, and then see dollar CAD back under my level. Yeah. I don't, you know, oil's already weak, right? More weakness doesn't seem to be helping dollar CAD trade, so you know, just cut the line. And US dollar's weak in the same point, and the commodity currencies aren't exactly aggressively selling off, so there's no reason to be in a trade which is not behaving as you expect. Now, will we see more heavy selling in the Aussie dollar, Kiwi dollar, and Canadian dollar if US stocks continue to fall and get a bigger level to the downside? Yeah, probably, but no reason to run that sort of risk. Euro is doing quite well on the back of the dollar yen weakness, and just generally it seems to be a bit of a correlation between euro strength at the moment and stock market weakness. That's probably going to continue as well. Yeah, the dollar yen unwind's probably going to be too much, and the US dollars have to go somewhere. Might as well be US dollar and that sort of sympathy trade. Don't the pound, but you know, obviously gold and dollar yen have a nice inverse relationship too. All right, let's have a look here, boys, at some of the data in terms of the OC RBNZ this morning. The OCR rating was kept the same. Now the market was looking for some you know, comments to get the Kiwi selling off, and while they did say some concern about the New Zealand dollar price, it wasn't really something to latch onto, right? And so they've stuck to their fairly neutral outlook and remaining on hold for an extended period of time, sort of talk. But they seem to have left it pretty much alone, and so the Kiwi dollar went down and then straight back up because the market was looking for more. Now, this rally though hasn't got to 73 or anything, so it's not like we're out of control here with Kiwi strength. And the although the Kiwi buyers in general have the technical advantage, the levels and the backdrop here is that the stock markets are potentially rolling over, and that's definitely a way the Kiwi gets crushed. It's via the risk off. And where would it come from? It would come from trades like the Euro Kiwi would start to rally. So Euro CAD's doing quite nicely. Euro Aussie's another trade which is quite nice, but the Euro Kiwi, because of that Kiwi outperformance, hasn't really broken higher yet. And so there's some trading to be done on that pair. If you're trying to look for a trade which makes a lot of sense and has a lot of upside potential in the event of a sell-off, then this pair hasn't moved yet. So you've got a lot of upside room in this, and it's just not the worst candles here. It's definitely basing a little. It's having a pause, having a think. So Euro Kiwi would be a trade that I would play as another way of expressing potential risk off trading coming forward. Stubbornly, the Kiwi dollar gets dragged down by the CAD and the Aussie as part of the commodity block, and then when the techs turn, you get the extension. Right, but at the moment, it's still respecting very nice downtrend. Right, let's just pause a little, have a think. If the stocks roll over here, you are going to see Euro Kiwi as a nice trade high. Maybe we should take a little one on that. I'll let it and see if we get some more stock market selling. It's not a bad trade though. Yeah, it's not a bad trade. Risk rewards is there on that one. You can risk 100 points to make 300 or 400. One pair which is suffering because of that Kiwi outperformance still, and is threatening to sort of grind its way down to some key levels, is the Aussie Kiwi. Now I know a lot of you sort of buy the Aussie Kiwi below 105, and it's worked out 10 times out of 10, right? So it's like, well, you've got to buy again at 103, 390, yeah. Of course it's worked out so many times, but this time is a little bit different because you've got very steady central banks with the commodity sort of outperformance of the dairy versus iron ore. There's no reason to rush back in here, because where's the catalyst for the reversal going to come from? It has to come from the Kiwi falling faster than the Aussie in a risk-off environment, and that's not the normal way. The normal way is that if stocks crash 10%, this there's a subtle relationship that is the Aussie Kiwi falls in that environment, because the Aussie dollar sold more aggressively than the Kiwi in those risk-off moves. Now, perhaps the Kiwi outperformance has made that not be the case if there was a sharp sell-off in stocks this time, but it's something that you have to be aware of. That when you're asking yourself on the crosses, your crosses are never the main technical pair that you need to be looking at. If you're a technical trader, you always got to go check the majors and ask yourself, how does this one rally? Does it come from the Aussie or does it come from the Kiwi side? And just here, I can't put a story together. I can't even see how this Aussie Kiwi rebounds now. And it would have to be Aussie going to 77 with the Kiwi underperforming. Alright, so that means no stock market risk off. That means some good news out of China or some good local data here in Australia. And there's just no data being released in the next couple of weeks that could do that. Yeah. Well, the usual correlation, Erebus. I don't know, are you long Aussie Kiwi and want me to tell you it's all going to be okay? That being said, if we get down to parity, I'll be buying. I'll be buying, and the market will find a way to go back up, right? But it's, right now, just hold off and keep your powder dry, and we can start to buy when we get the either the level that's never been broken, or the reasoning from these levels. In terms of valuations, when you value currencies, and economists try to do this, then the Aussie Kiwi should be around about 112, 113, given the difference in our interest rates between the two countries. Now that relationship is not in play for the last 2 years, but it will come back at some point. Yeah, it will come back at some point. So, you know, this is just a wait and hold scenario. This is the best thing to do. Sellers are in control. I'm not a seller down here though, but it's, you know, put a gun to my head, I'd sell if I was trading for the next 2 weeks. This is another one which is getting down to some big levels. The pound Kiwi at 175 was a lot of chatter at 175. It gets onto everyone's radar down those levels. Can we go lower? Not too much more. Okay, so we're getting to fresh all-time lows sort of scenarios down there. It's yeah, it may end up being a nice way to play a pound recovery trade if we get one. If we get a soft Brexit and we get stability in the government, then I think that and the Bank of England raising rates, then yeah, it could definitely be a nice way of playing the pound recovery. But yeah, just not yet. In terms of the pound recovery and the old Bank of England, I read a nice little article today from Barclays. They're talking about a November rate hike getting more likely, and that's because Haldane came out last night and was surprisingly hawkish, and that everyone started to place him in the rate hike camp. So if he's in the rate hike camp, then all of a sudden it doesn't matter that Christine Forbes is leaving. You've got yourself another little player. And if that's the case, that's the new sort of gauge that you have here. You got 5 in the middle. You know, no one wants to cut anymore. So you got these guys here saying, "Well, let's wait and see how Brexit begins." You got these guys saying, "Well, you know, no reason to have emergency sort of stimulus at the moment. Inflation's pretty strong. Let's start to raise quickly." Go to Pro Real Time and just get the trial and see if you like them first. That's the best way to do it. You don't have to go open a new broker account. Yeah, it's madness. Because yeah, you have to do minimum trades each month, otherwise they charge you $60 or something. Oh, let me do it for you. Here we go. I just get them straight from the maker for a free trial. Crazy cats. Alright, the politics and timing of why November is the best opportunity. Howden said he didn't vote in June because he wanted dust to settle following the elections. Alright, so the elections have to be sorted out. They haven't even formed the government yet. And probably wanted to see how the Brexit negotiations begin. Yeah, but we continue to get high inflation. They're going to start to snap back. So stability in this particular case is going to lead to the market pricing in the pound. So that's why pound is not the worst way, not the worst thing to be bottom fishing in. It's just you gotta be careful, and it creates good two-way action for us as traders as well. So 125 is where I start to look at it. Between 125 and 124, I'll have a look, and you know, at those levels, we might be able to put a bottom in on a range, get back to 128, maybe 130. and pound yen, you know, our little pair there, the pound yen is also starting to get towards levels. 138 is the level I've been looking at, so that's about 200 points lower, 250 points lower from here, and that will coincide with pound at 125 and a dollar yen at 110. So a few days of risk off, a couple of headlines regarding, you know, the UK as well, then you could see that happen, and that would give us a nice risk reward level to get involved. Alright, good luck with your trading, guys. I'm going to end that one here. Alright, let's have one more look, one more little look here. Alright, so the soft buck stops here from Citi. So the US dollar's been under pressure, and you know, people asking, you know, is this going to be a short-term thing? Is dollar yen going to find support soon? Are yields going to find support? They're going to start bouncing back, or is the market, you know, playing the whole game of lower for longer for rates and pricing out rate hikes, and gold's just going to get under pressure as the market starts to trend against it? These guys are against our gold trade too. The mix of high yields, a strong US dollar, resilient equity market, although they do have short-term concerns, and an improving economy is the worst possible setup for gold price. They expect it to move back to 2015 lows. So they expect US dollar strength to stabilize and start to rebound, and they expect it soon. And they expect wave patterns similar to 1999's or the 1990s, which could happen. I mean, it does sort of, market does go in cycles in terms of rates, as well as and there is some similarities if you're looking at this. Alright, they're looking for a double bottom there. Oh, that's a pretty dodgy double bottom. And looking for the euro to turn lower. This is all technical stuff, guys, not fundamentals so much. So there has been some divergence here between the US dollar and the which might snap back here. Okay. I don't know. I'm pretty bullish on the euro. I don't know about the euro part of this. I think dollar yen has the potential to rally still if US yields start to creep high. But I don't think that means that the euro is going down. We'll see. It's going to be definitely an interesting fight on the euro USD front. It's a bit more mixed than most pairs, right? So the outlook is to that point, you know, very, very stretched. I mean, there's so many different things that could happen in the euro USD, depending on how the Fed evolves and how the ECB evolves. But for me, for one, I hope that we do have a couple of days of risk off selling in stock markets, so we can get some euro yen levels down towards 123, 122.50, and that's really where I want to be buying. So hopefully we can get a little risk-off continuation. Now, stocks have been remarkably resilient for the last 5 months, so we've got to be tempered a little bit in our expectations. But like I said last night, that weakness in oil is a good enough reason from all-time highs in stocks to bring about a correction. So that's what we're looking for. So that's why we're long gold. That's the trade that we're in. We were in, and it was... I must have closed it out by mistake. Okay. Gotta be careful when you're flipping through charts and flipping through screens. Cheap oil, cheap oil generally is taken by the market as global growth is poor. Is it good for the US economy? Perhaps, but that doesn't mean that it doesn't lead to concerns that global growth is slowing, and therefore stock market weakness. And we're just talking about a theme and a story which the market can grab a hold of, and so that's why we can see that unfolding. But yeah, I mean, in some regards, the US's stimulation from more consumer spending anyway on non-oil, so non-petrol based things. But yeah, no, I'm talking about the way which stocks can fall. All right, guys. Good luck with your trades, and I'll be back on Monday. Hopefully, we've had a couple of days of selling then, and we can look at dollar yen towards 110, and then we can start to look for buying opportunities on some of the yen crosses too. Other than that, keep an eye on the Kiwi dollar. If it gets above 73, then I think the bulls have won. If it rolls over here, that gets much more interesting for a few of our pairs, including the not just Aussie Kiwi but the Euro Kiwis are quite interesting here. Alright guys, good luck with your trades. We'll be back then. Trade safe.